Good day, everyone. This is Dan, Sharpe Trade. And this is an entry I've been meaning to do for you folks, the clients of Sharpe Trade, LLC, for a while. We're probably going to end up putting this particular entry in the short-term trading course on the forums. So the course materials, there's supplemental information that's on the forums, a bunch of information. It's almost a course in and of itself. We're probably going to put this in the questions and comments because we know there's a few threads there, so we're going to put this in the questions and comments section. You're the folks that have shown you're serious, right? You've shown us you're serious. And so the managing members, managing partners of the firm are sitting around talking. It's like, let's go ahead and show these folks, who've shown us that they're serious. Let's show them what we actually use. Some of the tools we actually use. I mean, you'll notice over time that our performance is really good. I mean, our drawdowns are minimal, very smooth, return graph, and, just about how we go about doing that. And so, I mean, you got to know when somebody's sort of trading private capital, they've got a few tools, right? And so we thought we would show you those tools, and that's what this entry is going to be about. So here you see them on the screen, right? I've loaded them up. I'm just kidding. I'm just messing with you. I literally went through here a few minutes ago and it's like, oh, what else can we throw on here? Let me find another one. Yeah, this one looks good. What the hell are monkey bars? I have no idea. Like, woo! Like, God only knows, right? I literally just threw them on there. I did that for a couple of reasons, and I know some of you knew I was probably joking around just because of the previous message we've preached, many, many times in many, many entries. There is discretion. Some of what we do is built on discretion, and you develop your discretion through putting in years of working on charts, and you discover things for yourself that work for you because they may resonate with you because of your personality. We were talking about time frames that we enjoy trading in recently in one venue, and I'd mentioned I like about 18, 19 days, somewhere 0 to 18 to 19 days. That's where Dan likes to play. Why? Because that's where Dan likes to play. That's the only reason. It's me. That's a personal thing. Any more than that, I have to... Yeah. Anyways, it's just me. For short-term trading, that's what I like. And within that periodicity, you develop skills. You develop a read. You develop different. You just develop a read. Rob over at DTG called it pinball wizardry, right? You just get a feel for things, and it's like, I just didn't think that was. I looked at several markets and thought about their correlations, and I looked at that, and I just didn't think that was playing out. I thought about the auction, right? Things like that. So that you have to build up over time. As far as ways to slice and dice the data, this way is wrong right now. I'm telling you that right now. Because you can't even see the price action. God only knows. You can barely even see the tools. They're also layered on top of each other, but you see that's what people do. But that's not the mistake that I really wanted to stress here in the beginning. I think, and again, Rob was the one that really nailed to this idea. He calls it the rise of the internet trader. I do think that thought process has become prevalent to the extent that it is quite dangerous. In other words, that there's some secret tool. And the secret tool, the secret squiggly line on the chart, that's how I'm really doing what I do. And it's not. It's not at all. It's just putting in years and years and years worth of effort. I heard one trader say this one time, basically stare at the screen until your eyes bleed and keep on trading and keep on being involved and keep on risking money, and it'll start to work. It's not an easy career path by any stretch of the imagination. You have so much more available to you now than you did than when I started. Sometimes I'll be honest, and again, I was talking with Rob about this the other day. Sometimes when you interact with another trader, it sort of spurs some thoughts forward. It sort of dumbfounds me at times. Sometimes I don't want to discourage questions, but I know in my own case, sometimes I'll get questions and I'm like, dude, You could have Googled that. Why are you asking me that? I mean, no joke. I've had people come by my house and say, hey, Dan, I was curious and I thought you'd be the guy to ask. What's the going price for Coca-Cola right now? And I'm thinking, are you freaking serious? Did you just tell me that you come by my house by something you could look up on your stinking phone? It's 42.31. Here, where's my phone at? I know it's around here somewhere. I mean, questions you can look up for yourselves. A lot of stuff I had to just bang my head against the wall. What we seek to provide is sort of a shortcut and a lot of principles that everybody's is using. That's what that short-term trading course is. And to really give you a shortcut and sort of a leg up on stuff I honestly had to find out for myself for years and years of banging away at this. But I do think in interacting with a lot of traders, not folks that are clients of Sharpe Trade, just everybody, I do think in just reading forums and just going out and perusing what people are saying about markets, I do believe that thought process is out there. I really do believe that there is that thought process of the guys who are really making the money, they have the tools and they're not willing to share them with you. And if you could just find this right secret tool, if you could just find the right squiggly line on the chart, it would all become clear. The clouds would open up. And money would just rain down from heaven upon you. And you would always be correct. You would never be wrong in your calls. You'd be 99% accurate. And with a 1 risk to 19 reward ratio. I mean, deep down in places, I think a lot of traders, oh, no, I don't believe that. I think deep down, people really do believe that. And I would say no. Matter of fact, let's get all this garbage off the screen, right? This is just complete ridiculousness. There. Much better. Much better way to look at the screen. I put a couple of tools up sometimes, overlays, just as a means of a highlighter. They're not predictors. This is just pure price action, right? Here's the thing you got to understand about the markets. It is a fight. It is an ongoing fight, and it's like, well, it's the bulls and the bears, and I understand what you mean, Dan. Now, it's a multi-layered fight. You got guys trading point and figure charts. You got guys trading order flow on futures. You got to understand there's the E-mini, then there's the actual, SPX and the S&P 500 index, and then there's, the underlying that all of these are actually built on, and there's guys trading, and they may be in a trade for literally, they're still, especially in the futures space, there's guys that are in a trade for seconds at a time, mouse traders. I'm talking at-home mouse traders. There are guys that are in a trade for 2 hours. There's guys like me that'll put a position on an actual instrument like a stock for 5 years. And all of that's overlaying, and it's just this gigantic auction. It's a gigantic fight. You are out for you. Period. That's probably why I like it. I have a bit of a, scrapper mentality. It's been described, I just like that. It's probably why I'm attracted to it. But it is a fight. Don't ever forget that. And this is what the professionals, they have positive expectancy. They realize this is not a 9-to-5 job where you get tenure. And once you get tenure and you're a veteran and you're net profitable, you never have to worry about destruction. No, this is not a 9-to-5 job. And there's some black swan out there that no matter how good you are and how talented you are and how much money you make, something weird can happen. Look up tail risk, black swans that nobody accounted for, and it destroys everything you've done. This is not a 9-to-5. This is a survival game. And you get really good at it and build yourself a really nice fort that's lined, metaphorically speaking, lined with machine guns and everything else, and protect your capital really, really well. But you can never stop thinking that, yeah, it is a survival game. I mean, look at in the the Middle Ages, right? Guys built all these castles and everything, and it's like, and then it was about building bigger castles and bigger walls and better walls and armored walls and armaments on the wall, until one tiny little invention made your entire wall concept for a castle completely and totally pointless. It blew big, huge holes in your wall quite cheaply. It's why we don't live in castles anymore, at least not to protect ourselves. It's just, what I'm saying is, this is a survival game. So get out of your head. Get that whole thought process out of your head about that somehow I figured out the secret tools and the clouds have opened up and the angels have started singing. No, it's just you learn to dance in the middle of the ring a little bit better. You learn to duck, but you still get bruised. You're up 35%. And then, I'm sorry, you may recover more psychologically much more quickly, but it's still a kick in the stomach, when you lose, 15% of that. Do you think that doesn't happen to every professional out there? Are you insane? Absolutely it does. And you go, oh, well, this is part of the game. This is part of what I signed up for. The rewards are really great the longer you can last. That's what you need to get in your head. You are entering a fight. A massive, massive, massive fight that wants to lull you into complacency. And you treat it like a hobby. Oh, that's some of the easiest money out there. People that treat this like a hobby. So, yeah, there's no magic tool. Okay? And that's why we threw up these clean charts. You'll notice I put it up in the StockTwits stream, Twitter stream. I even put it on my own personal feed earlier today. Where is it at? Here it is. It's on my other monitor right over here. I basically said I hate predictions because I think they're silly because, we all live right here. Right? This is where we have to make our money. Right? Here. This big black void that we don't know what's going to happen next. I always use the metaphor, an asteroid could come flying out of the sky and hit something, heaven forbid, and I didn't account for that, so, we don't know. None of us know the futures. So I hate predictions. I think they're silly. But I have to walk into the day with some sort of mindset, right? We do develop, are we bullish on the particular... most mornings, I'll put it that way. Most mornings, we send clients major markets, some of our positions on 3 of the processes, and on major markets, are we bullish, are we neutral, or are we bearish? That's not unique to Sharpe Trade. We're not some unique thing. That's the way most folks work, and that's what we try to stress to you is this is the way most professionals operate. So try to give you a little bit of a leg up. Right? Sort of shorten the learning process a little bit, but you're still going to have to put in the time. But anyway, let's take this back. Yeah, we all have to operate in that void. It's a giant fight. Get it out of your head that there's some magical tool. So we had this big sell-off the other day. I forget what we were down, 125, 130 basis points or something like that. And I said earlier in the StockTwits stream, and on my own personal feed, that I hate predictions because I think they're silly. But based on that bullish or bearish or neutral stance, it helps to walk into the day with some sort of outlook. Okay, this is what the auction's doing. Now that's what I would really like this entry to be about. That's what I would really like this entry to be about, because that's a thought process. That's not some squiggly line on a chart. And let's face it, this happened, this back here happened 22 days ago. Are you really thinking about, this red bar right here? It happened 22 days ago. Do you mean to tell me that people are entering the market thinking about what happened 22 days ago? No, the whole idea is, I got to remember what happened on the first, and I got to remember what happened on the second. No, it's ludicrous. Do I look at price action? Yes. So that's what I want this entry to be about. I want it to be about price action. It's going to be very basic concepts to people that have already gone over price action. I have not covered it, and again, talking to Rob, I think he's helped me to see somewhat diplomatically that sometimes I just say things without even thinking about it because it's become second nature to me because I've done this for so long. And, he's sort of helped me to appreciate you're skipping past some of the basics that folks might need to know simply because you're assuming they know it because you've known it for so long. So we're going to go back to way basics. And I'm going to talk about price action. I'm going to talk about the auction. This is a candlestick chart, but you could do it on any chart. You could do it on a point and figure chart. You could do it on a Renko chart. You could do it on anything. Heiken Ashi, any number of them, okay? You have to decide one way to graphically represent what you're going to talk about. So we're going to talk about candlesticks here, okay? Because that's what most people use. So some people don't like that. They like the point and figure, so whatever. I'm just picking one, okay? And we'll just talk about price action because in my stream I said, and I've gone to say this about 9 times and I haven't gotten into it yet, I hate predictions. I think they're silly. But you have to walk into the day with some sort of feel built on our core periodicity stance, like let's say on equities. And on equities, like right here, we became neutral. We switched from being bullish and we switched over to neutral. And I want to talk about that. And then I said, it wouldn't surprise me to see a rebound on nervous profit taking from those who held overnight as they begin to puke it up. So that's what I want to talk about today, and building sort of that discretionary feel, because there is no right or wrong answer. You just have to think about the ongoing fight. Now, to do that, I'm going to outline some precepts for you, but I think it's important to keep in mind that those precepts are only a guide. There's a lot of discretion involved, but there are certain things that I keep in mind. Okay, as precepts to keep in mind that this is basically the way things tend to operate, though every single statement has a caveat. Everything I'm going to say has a, well, except for that one case or except for this one case. It's a fight. It's a fight, right? And we don't know what's coming in the big black void. All right, so let's talk about that a bit. Let's talk about price action. Markets do, despite high-frequency trading, and somebody front-running, and this guy had an unfair advantage, and blah, 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 blah. All that stupid nonsense you hear on financial media sources where they wouldn't know how to find their rear end with a roadmap. Despite all of that nonsense you hear, if you look at a candlestick chart, and they did have candlestick charts, centuries ago. If you look at open high lows close part, you looked up the prices of rice back in 1653 and put a open high low close on it for some specific periodicity. Or if you looked up the prices of cotton in 1851 to right now, looking at E-mini S&P 500, you're going to see that markets typically do the same thing. This is one of the precepts. Markets trend, they stop, they backfill, and then they sort of resume trend. Every once in a while, for whatever periodicity you're looking at. I'm going to say that again. For whatever periodicity you're looking at, and it's very important to define the periodicity that you want to operate in. I can't tell you how many people say, hey, I've seen this on like Facebook groups and forums and stuff. Hey, I'm long Ford. What are your thoughts about the trend? And I instantly think, are you long Ford for a day trade? Are you long Ford for a 15-year investment? Are you long Ford for a position trade that's going to last 8 months? How are you long? I don't know. What's your periodicity? Because the trends are going to be different. They're going to be wildly different. You can see that on this chart. Hey, if your periodicity is like 3 days, well, guess what the trend is on the E-mini? If your periodicity is months at a time or 6 months or 18 days, a little bit different, isn't it? So you have to define the periodicity that you want to operate in. I'd say that's almost point number 2. You have to understand, okay, for this process, I'm going to operate in this periodicity, this time frame. But again, going back to point number one, markets tend to do what they've always done. From time immemorial, eons ago, to cotton prices in 1853 to the E-mini S&P 500 futures for the June contract in 2017. They are trending and they stop and they backfill and then they pause a little bit and then they resume the trend. They trend, they stop, they pause, they backfill, they pause, and then they resume trend. I don't care about HFT. I don't care about any of that other crap. That happens because of human nature. And every once in a while on your defined periodicity, you may get a trend change. 2008, right? So that's the first thing we'd say, is just markets do what they've always done. Now, sometimes people will talk about patterns. I don't put a lot of stock in them because patterns lead you to the trap of apophenia. And if you come over to Sharpe Trade, and you type in apophenia, we've had a few entries on it. Crack for apophenia addicts, from apophenia to professional trader. I don't know why it's in this particular entry. Yeah, because we referenced one of the apophenia, trap of apophenia podcast on that topic. But regardless, we've talked about apophenia before. It's recognizing patterns in random data. The data is completely random and you just start seeing patterns. So I don't believe in patterns. There's a difference because what that will do is it'll make you cause to think you can begin to predict the future. That you can begin to predict what's going to happen here. And you can't. In this big black void. You can't. So that's why we stay away from chart patterns. However, you will see the markets do certain things. I'm going to not mention DTG's Discovery Trading Group's just comments on structures, major market structures, because, well, that'd just be stupid, wouldn't it? If I sat there, I will say it's absolutely true what they have to say about market structures. Absolutely, positively true. For you folks, yeah. So go to DTG and read up what they've had to say, and sometimes in public venues about market structures. Guys were trading back in the 1970s based on many of those concepts with no thought of does the ADX say. So that's not chart patterns, that's market structures, and there's a difference. Sometimes, yes, the trend, you define your periodicity, as we were saying. However, remember this is an auction. So how in the name of God, after that sell-off, did I say I wouldn't be surprised to see a rebound, which is exactly what we've gotten? Is it because Dan can predict the future? Because Dan is so wise? Because Dan has some secret tool? No. Two things happened. First of all, I looked back at the past. Then I remembered this is an auction with many participants, and they're all fighting it out, and they're all greedy, and they all get nervous, and they all get uncomfortable, and they all get egotistical, and they, our elation level rises way, way, way too high when we're up and up big because we were short. And that produces some of the same results that you begin to see over and over again. That's not patterns, that's thinking about human behavior. So, talking about human behavior, remember it is an auction. That would be, I'd say, point number 3. Please remember this is an auction. Come back over here, right? We have the green, the bids. We have red, the offers, and then we have the mark. It's an auction. So that would be point number 3. That is something that I have said, good God, since like 2007 when I started throwing stuff up on the internet. Please remember this is only an auction. Just like an auction for a house. Just like an auction for a car. eBay. I don't care what, it's an auction. Which is when human psychology comes to work. So sometimes people will talk about patterns, right? And you can debate this with me. I don't really care if you want to debate it with me because this is what I believe about the markets and this is how I avoid falling into psychological traps that ruin me. Again, as I was saying at the outset, this is a survival game. So I'm not interested in debating these topics with anyone. Because these are the tools that I use and the beliefs that I have so that I can survive. Okay? Understanding it's a survival game, and I want to survive by avoiding very, very common psychological traps. So look at this right here, right? We made this high up near the 2400 level. We came back again, and I said when we sold off here, if you go back through those entries on the daily forums, what did Dan say? Dan said, I'm very wary of this 2400 level. Very, very wary of it. And we had this nice sell, but I wouldn't be surprised to see some sort of retest of that 2400 area. And then it's at that retest, right here at 2390, that we'll be able to tell what the market's going to do, because I can't predict it. It's either just going to keep ramping up higher, and all the people that do armchair quarterback will say, ha ha ha, all you stupid idiots. Yeah, the market rally. I told you. Or it's going to sell off, and all the bears will say, ha ha, I told you, you stupid idiots, this market's going lower. As they all are really trying to predict, and they don't even realize, oh, no, I know I shouldn't predict. But that's what they're really doing. All I said is, okay, I'm wary of this 2400 level. We sold off, and I said, I think there's a retest coming, and then with that retest, I want to evaluate that. So was that Dan foreseeing the future? No. It was Dan thinking about the fact that this is an auction. So let's talk about that. You can call that a double top, because you will see this happen time and time again. So some people refer to it as the pattern. When I first got started, the guy that was talking about these, we called them 1, 2, 3 tops. Those who know what I'm talking about. I started calling them 1, 2X, because I started to realize, like right around 1998, we don't know what's going to happen with them. So I started calling them 1, 2X. In other words, 1, 2, what's this variable going to do? We don't know. That was like 1998, 1999. I started figuring that out. So we don't know if it's going to be a 3. Some people call it double top, right? I prefer to think of this as an auction, because that's really what's going on, because it is bids and offers and marks and reshuffle. Bid, offer, mark, reshuffle, bid, offer, mark, reshuffle, bid, offer, mark, reshuffle, bid, offer, and new data's coming in. So, as I said, and I've been saying since 2007, this is an auction. So think about it in terms of an auction. Okay? 2400, anybody? 2400? No, 2400. 2390. Okay, yeah, you're getting some. Do you see what I'm saying? And then think about it. Usually in an auction, it's like, all right, let's try that area again. 2400, anybody? 2400, nothing. It's just like an auction on a house. Trying to bid up the price, right? Not that the price is being bid up. That just isn't the way the markets function. But it is an auction. And the auction said, 2400, no. And it sold off. And we had to wait days and days for that to happen. And then it went right back up, and we got up to 2390. And it was like, okay, 2390, let's try and get it to 2400, 2390. Anybody at all, 2390. And the market said no. The market said no twice. So you can call it a double top. I prefer not to think about it that way, because I don't want to fall into a psychological trap. I prefer to think about it as to what it actually is, to avoid those traps, which lead you to thinking you can predict the future via apophenia. I prefer to think of this as the auction. And the auction said no to that area twice, because it started to sell off. And again, if you notice those daily entries again and again, I said I'm very wary of that 2400 area. So why was I wary of that 2400 area?